what's more important, at least on the short-term rental side, in my opinion, is closing costs. 1A, obviously a good deal is 1B, but if you can get, if it's a $600,000 home, $500,000 home, and you can go 520 instead of 500, but get $20,000 in closing costs,
Mm-hmm.
it's most of the time going to make sense to do that more often
Mm-hmm.
than not, especially if you're not worried about appraised value.
All right, guys, welcome to another episode of The Reports. Today, we are back in the studio, and we got a Beers and Deals real estate meetups tonight. And I'm going to be joined by my guest today, who just flew in from Clearwater, Florida. He's changing the way short-term rental business is being done. I got my man, Elliott Caldwell. Elliott, welcome to the show.
Thanks, man. Excited to be in the beautiful office and the meetup tonight. That'll be sick.
Yeah, man. Excited that you're going to be coming out, and appreciate you flying all the way out from Florida, dude. You said first time in San Diego.
Yeah, first time. Well, I was here when I was like 4 or 5 for a wedding. I don't remember that. So first time that I remember.
Okay.
So
that's good that you'll be able to remember
beautiful
this
city.
one.
Beautiful city.
Yeah, it is. I mean, you can't beat it. It's middle of January, middle of winter. We got clear skies and 65 outside maybe? Cool, dude. So tell me what you're doing in the short-term rental space.
Yeah, so we launched probably, I sold my previous business April of 2022.
Okay. What was that?
It was a high school sports fundraising business. It was kind of the fundraising. It was like the sports version of a GoFundMe. So we worked with high school sports teams across the country, and then sold that April of last year, of 2022 now. Before that, my second son was born in January. So I took a little hiatus, spent some time with, at the time, my 2-year-old newborn. And, April, May, June, got the itch again. June, July, started tinkering with it. At the time, we self-managed about 6 of our own properties, so it just made sense. Started a management company.
Mm-hmm.
And then in July, partnered with Michael, who you've had on the show before, and we launched August 1st. It was being officially incorporated, 2022, so whatever that is, 16, 17 months ago. And it's just been straight uphill since. Started with my 6 and Michael's probably 6 at the time, so 12, and now we're over 300 managed, probably about 180 of those kind of organically. And then we did a large acquisition in Port Aransas, Texas. We acquired Turnkey Vacation Rentals last June. It was like 120 contracts that we acquired there. And then, we have a bunch of different funnels that funnel into our growth. Our biggest thing is provide value and ROI and income for owners. And that's the pain point in the space, in my opinion. There's a lot of things that a lot of other management companies do that are shady, some shady tactics. But yeah, the past 16 months, we've gone from, like I said, 12 to over 300, and, kind of expect to be about this time next year, it'll be around 1,000 units. That'll one more, maybe 2 more acquisitions, but the rest will be organically growth. Got a lot of things going, and it's been a wild 16 months. So.
Yeah. Well, first of all, shout out to Michael Elefante. Love
the GOAT,
him.
Dude.
He's awesome. Love that dude. So anyway, so you got into this space just 18 months ago, and now you're scaling, and you're buying other property management companies. What's been the biggest challenge scaling so far for you?
Oh man, it's a good question. Probably the accounting. I think this is not just our pain point, but kind of an industry-wide pain point, but the accounting and finance. There are so many transactions coming in and going out. Especially with our design services and we'll talk about it later, but our Airbnb turnkey service, where we are finding the property, analyzing the property, getting the property for the investor, but then also designing the property and buying all that furniture for that investor. So we've done 78 up to this point. So that's 78 people that we have bought furniture for. Now they wire the money to our account, and then we go and buy the furniture for them, but to keep track of every single penny. So as you can imagine, 78 times, call it, $50,000 a home, and probably 300 items. Like, it gets to be a lot. And so that's just the design side. That's not even including the management side of paying for the the electrician coming by the property, the HVAC guy, whatever it may be. And so I would say that's been the hardest part.
Yeah. Dude, I feel you there with the accounting. We use a couple third parties. Exemplify is one of them, but it's a mess. Like, it's just so many different line items, and then each property has all these expenses that come out. It's just nonstop, right? And so each property has a P&L that's basically generated each month. But from an accounting perspective, it's a lot. And then, we're at the point now where we're kind of like at this reflection point to probably sometime in Q2 of this year, maybe Q3, it's going to make sense for us to bring the accounting in-house.
Yeah.
But like the biggest challenge is, okay, well, we can go hire a full-time accountant for basically the same price that we're paying Exemplify. But now what if that person gets sick? What if that person leaves? And now everything's on their shoulders. What are we going to do? So we got to figure out what the backstop would be before we make that transition, if that makes sense.
Yeah, and it's hard too with you because and I only know this because we're starting our own fund here soon, because you had the that kind of the asset management accounting and the property management accounting, then the property accounting of the mortgage, the utilities. So I guess there'll be a lot even of that aspect too. So
yeah, no, it is. Who do you guys use for accounting? Is it third party?
So we used to use Exemplify actually.
Okay.
But it's all in house now.
Okay.
Yeah, we hired former Avant Stay CFO, is now our CFO, Matt Dorsey, great dude. He was with them from almost the beginning to wherever they're at now, 1,800 properties or so. Was with them during their fund. They had raised about 500 million, or not, like a commitment to 500 million. Ended up putting into play about 70 million of that.
Mm-hmm.
So he just has he's seen it all, and it's really came in and helped us organize our accounting, and more of our processes and our softwares and our systems to more automate that. So the past year or two, really some of those softwares came to play that have been really helpful for us, and kind of to automate that.
So give me the rundown. So let's say I'm a client, I hit you guys up, I want to go buy a short-term rental, I want to be completely passive, and I got the ability to buy a $1 million property.
Mm-hmm.
What's next?
Yeah, so we're gonna have a kickoff call. Right, all right. You signed our agreement. We work together. We're gonna have a kickoff call. We're gonna do more in depth. All right, you got $1 million, great. What are your goals? Like, where do you want to be? Location, budget, and what are you putting down? What do you want your kind of LTV to be? What do you think in terms of that play? And then we're gonna questions come off of that, and that kickoff call usually lasts about an hour. And then we have 4 or 5 junior analysts that are combing through properties that you day in, day out, about 150 a piece. They're going to hopefully find 1 or 2, send it to our head analyst. The head analyst is going to send it to me and Michael. Me and Michael are going to approve it. It's going to go to the investor. And it's a spreadsheet analysis of the Zillow link of everything that, from the purchase price to the income to the overhead to the mortgage and your cash on cash return on the end. Then at that point, if you go under contract with that property, we're going to connect you with that local realtor that we know and trust. And then once you're under contract, we're going to start that design phase, where we're going to have kind of a design kickoff, get the design going, because we want to be done with the design presentation by the time you close or shortly thereafter.
I got a question.
Yeah.
So in the acquisition process, who's negotiating the deal, and who's doing the due diligence? Who's making sure the inspection's done correctly? And then if there's any repair items that are needed, who's making sure all that stuff gets done?
Yeah, so we really lean on that local realtor for that. If it's a market where we don't know a local realtor, actually one of our turnkey clients, his name's Tim Heyer. He's up in San Francisco. He has a company called Trusty Homes. Shout out Tim. What they will do is they have a kind of their algorithm. Say for example, Rich, you wanted to buy a property through us, and trying to think of an area we're not in Boston, Massachusetts, right? So he's gonna have we're gonna fill out a form for you on Trusty Homes website. So you're Rich, your information, kind of what you're looking for, short-term rental, all that. Our algorithm's gonna pair you with the best realtor in that area for that. And so we're gonna work with that realtor. So they're gonna do help us do the due diligence on the local regulations, and also the inspection report. Also we're gonna look at that too with them, and also negotiation tactics, offer strategies, whatever that may be. Most of the time we're gonna try and go in either at asking or over asking, because what's more important, at least on the short term rental side, in my opinion, is closing costs. 1A, obviously a good deal is 1B. But if you can get, if it's a $600,000 home, $500,000 home, and you can go 520 instead of 500, but get $20,000 in closing costs, it's most of the time going to make sense to do that more often than not, especially if you're not worried about appraised value, because then you're almost basically just financing that 20 grand over 30 years. So yeah, we're working with that realtor, but they're also working with our team internally, kind of a trade-off on both. So.
And you guys have like preferred lenders that you guys work with as well?
Yeah, so there's 2 or 3 that we work with. We don't eat on the realtor side and the lender side. We don't get anything back from if you use our realtor, so we don't really care who you use. They're just people we know and trust. But yeah, we've got 2 or 3 realtors. Out of the 78 clients that we've worked with so far, I bet it's been a third with those 3 lenders that we've recommended.
Yeah, absolutely. And then you guys have, because the design element is everything with these short-term rentals, right? Especially with the boutique hotels also. But the way that you put together the design, the finishes, the photography, the staging, that could be the difference of, $20,000 to $50,000 in revenue. It's a huge swing, right? So who do you guys use for the design team? Do you guys have it in-house, or do you guys outsource it?
Yeah, we have it in-house. And then with our
is the Summer-led girls, are they
they
involved?
are. So with our management clients, just like if a managed client reaches out, is like, hey, they want to update their management or update their design, we do that internally. But then all our turnkey clients, we use Summer-led for that. And that's especially like on the inside and the outside stuff. Most importantly, though, you mentioned it, without, if I had to choose one thing that's going to be like the difference maker in a successful, Airbnb short-term rental, it's going to be design. But most importantly, not just necessarily like the wallpapers and the furniture itself. But a lot of people skimp out on and don't focus on the amenities, to where, if the budget's $50,000, right, you're obviously not going to put all $50K just into the inside. I would rather have like some, especially the guest bedroom. I think you need to have one like master bedroom with sick wallpaper and sick, neon lights, and great furniture. But those like guest bedrooms, in terms of, putting the money there or putting it to putting green, movie theater, chipping course, playground, whatever it may be. It's more important to there than just put it into like guest bedroom and dumping thousands of dollars into the guest bedroom, and create the guest bedroom feel of more like a standard hotel feel. Because, people are going to spend most of their time, outside the bedroom, especially on vacation. So,
If you love real estate investing, passive income, and tax benefits, but don't have the time, my company, Summers Capital, is buying boutique hotels right now. We source the deals, we renovate the properties, and we even handle all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, visit summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show. What do you tell the folks out there that say, hey, there was a big boom with Airbnb in 2020, 2021 because of the pandemic, people weren't able to travel internationally, and now we're seeing a pullback. They're seeing different markets be oversaturated with the Airbnb stuff. What do you say to those folks?
I would say I agree. To a point, I agree. And we're seeing it with our, over 300 homes that we have managed. There are some properties that are absolutely killing it. There are some properties that are not. So what's the difference, right? And the difference is the properties that are killing it are the ones that went above and beyond at the beginning, and they have the amenities, they have the design. These 78 properties that we're putting on the market, they're going to kill it because they are, the top 1% of the 1%. The days are over. Grandma's, cabin in the mountains making money with their crusty furniture. Like, those days are over. But because there's, we're coming into the space, you're coming into the space. There's other private equity coming into the space that are really putting money into the space, and it's becoming more of a professional asset class than it is becoming just a, hey, let's go rent our, house. It's becoming the, a true hospitality industry. And obviously, it'll, officially be that. It's not it right now. You and I are working to change that. And so, I mean, I do agree with that, and so there's market specific too. And we still have markets that we freaking love and they're killing it. I won't say the city, but there's a market in Arizona. We just bought a property in for $650K. In the first 50 days on Airbnb and Vrbo and all that, it did $80,000 in bookings.
Which market is this?
It's in Arizona.
Which market?
I can't tell you that.
Oh, no, come on, man. I own in Scottsdale. I'm actually going to be flying out there on Friday this week. The thing's always booked, but this weekend I noticed it wasn't booked. I'm gonna go check it out. And
the only reason, I'm not saying that I can't tell you that just to be that guy, but like protecting our clients' investment.
Is it a small market?
Small market. I'll tell you offline about that.
Okay. All right. Yeah. So we're in actually that property in Scottsdale is my best performing short-term rental. It's like a luxury property. It did push 700,000 last year. But to your point, some of the properties that we manage are doing great. Some of them not so great.
No.
I'm curious, like for your stuff, do you think it's more market specific, or do you think it's like the actual property?
Both. Yeah.
Yeah.
If I'm going to buy in Scottsdale right now, you can't go buy the 4.2 or the 4.3 or a 3-bedroom home. Oh yeah, I got a pool. I got a pool table. I got a pool. I got a putting green. Doesn't matter. So did everybody else. Like, you got to go in, do the pickleball, do the basketball, do the sand volleyball, do the resort style themed. I know a lot of people in Scottsdale that have been successful. You included, and that's what they have. Because that's the top 1% of the 1%, and that's what you got to be. In some markets, that's less than what it is in Scottsdale.
Yeah.
But
I'll give you an example. Like, okay, so out of all the markets we're in, San Diego is hands down the best market for short-term rentals. And we're in, I want to say 9 markets. dude, we don't have to push and pull on these listings. You don't need to put in pickleball courts and golf courses and all this stuff. Literally, you don't need to do anything but just throw these things online and have decent photos, and they just stay booked year round.
Talking about San Diego or
San
everywhere?
Diego,
Okay.
yeah. And then in addition to that, in May of last year, the city regulated. So they took it down from like 16,000 short-term rentals to 5,500. So now there's even more demand for the STRs here. But I think a lot of it's like the year-round climate's good. So there's not really like there's not really a shoulder season. And then you factor in the regulations and it's like less supply.
Oh, that's going to kill it.
But dude, yeah, these things just hum in San Diego. It's crazy. But then you go to Scottsdale, like you said, you can't buy a 4-bedroom house and throw some IKEA furniture in there and expect to do good. You're going to get ran over. You have to be unique. And so I think every market's a little bit different, but I think some markets are much better than others.
Yeah. And you mentioned, in San Diego, this regulation can sometimes be good for the investor. You know?
And here's for the listener out there. There's last time we checked, I think there's still 800 licenses available in San Diego. So huge opportunity for someone to come into a good market and get a license. I don't know if people were like sleeping behind the wheel or they didn't want to pay the fee or they just didn't know about it. But 16,000 short-term rentals, 5,500 licenses, and there's still like 800
Since
left.
yours are doing so well, are you trying to buy more here since there are some licenses available?
Yes, we are.
You're putting all your money in the hotels?
Yeah. Well, we're focused on the boutique hotels right now. Here's the thing. For me to buy more down here, I got to sell some other properties in other markets.
Yeah.
But it's not a great time to sell.
Yeah.
It's just not.
Yeah.
The interest rate environment, I'm not going to get the same dollar I would have got 2 years ago. So a lot of the stuff I'm kind of holding. But yeah, I would like to pick up some more product here. I just picked one up 6 months ago here in this neighborhood. Did a full renovation. We're building an ADU. It's like 4 blocks from here.
Cool.
And that one's going to be online in like 7 days. So excited for that.
Yeah. I mean, especially in cities, I like, when there is some like favorable, every city's going to have regulation. But I look at it like this, especially in San Diego, where there's like a lot of hotels. Like if I came to San Diego with my family and my wife, my 2 boys, 2 and 4, like we're not going to be able to stay in a hotel, like, because we're not going to get 3 or 4 hotel rooms because we have to bring the nanny. We're going to have to bring my in-laws and we got to get an Airbnb. And so we're going to get that 4 or 5 bedroom Airbnb. So if there's low supply, but a high demand for people like us, like, that's going to be a key thing.
Yeah, no, absolutely. I think the saturation's big. And this is the supply really to drive. I mean, it's all supply and demand, right?
Yeah.
If anything.
Do you think the hotels drove a lot of the regulation in San Diego?
I think it's definitely part of it,
Yeah.
for sure. Definitely part of it for sure. But also, if you look at where all the Airbnb regulation is happening, it's a lot of like liberal areas.
Yeah.
So, traditionally, people that go and invest in real estate, they like the more landlord-friendly states.
Yeah.
But with us buying boutique hotels, we look at it the opposite way.
Yeah.
We want to go in areas where
Your
there's heavy
zone hotel.
regulation
Yeah.
or pending regulation because it brings more demand back to the hotel. So we're looking primarily in liberal areas.
That's a good point.
California coastal.
Yeah.
Great, right?
Yeah.
You go to an area that's very Airbnb like loose, like Indianapolis.
Yeah.
It's probably not great for hotels,
Or Scottsdale.
Or Scottsdale. Yeah, Scottsdale has 6,000 short-term rentals.
Yeah.
I don't want to own a hotel out there.
Mm-mm.
Yeah.
That's a good point to make.
But also, like to your point, you travel to Scottsdale, people are going to they want a single family home. They don't want to get a hotel room.
Yeah, their bachelor party, bachelorette party, golf trips, weddings, whatever it may be. So.
But dude, I don't know, man. I got to say, like when I travel personally, I do, I'll travel with a partner or I'll go solo. Like I just went down to Argentina during the holidays, solo in Buenos Aires. And so for me, I always determine, okay, am I going to get a hotel or am I going to get an Airbnb? For me, it always comes down to like the city, because some cities just have like really sick hotels and like the Airbnbs or whatever. But some cities are the opposite. Like you have really sick Airbnb options and the hotels are not the greatest. And so I just go like, what's going to be the best fit for that city for me?
Do you think there's a blended model there for hotel / Airbnb?
What do you mean when you say that?
So, I think of, you said it. Like if I'm traveling with my wife, just us, we're staying in a hotel because there's more. I want the rooftop bar, I want the steakhouse downstairs, room service, all that. I would love to stay in a hotel with a rooftop bar, and a steakhouse. When the kids go to sleep, I can bounce to the rooftop bar. Whether it be conjoined rooms, whether it be, is there a way to blend the 3-4 bedroom Airbnb with hotels?
So let's say you had a 3-bedroom short-term rental, like a single family, and you're saying that you would market it as a hotel?
No, I'm saying like in a hotel, like where are we staying at? The Alex put us there.
Okay.
Or one of your hotels in Little Italy.
Oh, you're staying at the Hotel Zendel?
No, I forgot where she put us.
Okay.
Starts with a C.
Okay.
Right down the street.
Okay. Okay.
Anyway, let's say for Little Italy, for example.
Oh, the Carde Hotel.
Yeah.
Got it.
The Carde Hotel. Let's say they had, the ability to create 4 conjoined rooms together. Could you market that as a 4-bedroom?
Oh, I see what you're saying. Okay.
So it's a 4-bedroom. Could you market it on the hotel on Airbnb as a 4-bedroom? If it books, great. If it doesn't, it books as you have the shared calendars. So you have the one big listing of the 4-bedroom, but then you have 4 other single listings of the 1-bedroom.
Yeah.
Could you blend that together?
I'm sure you can create an Airbnb listing and test it.
Yeah,
for sure.
I've always wanted to try that.
Yeah.
So especially like a boutique hotel model as well.
Yeah.
That'd be cool.
Yeah. Yeah. No, that's interesting. Yeah. I don't know what it is, man, but these like mom and pop sellers in the hotel space, you'd be shocked. Like we take over these properties and we just put them on all the different OTAs and like the revenue just like jumps.
You've done 3 now, right?
We're adding the 4th one to our fund right now. And then we manage a 5th.
Are any of those seller financing? Are they all?
Let's see here. 2 seller finance. Yeah, two seller finance out of those.
I mean, you see it, you've mentioned it on social media, but you see it in every industry where boomers are just exiting, the business and their businesses, and especially in the hospitality play. So no, I agree with you that it could be a great time. And I like your opinion on the California coast too. That's interesting.
Yeah, we'll see. We'll see how it all shakes out. But actually, we're gonna be shout out to what's his name, STR WealthCon out in Nashville, February 5th through 8th with Michael Shogren. This will be our 3rd time going out to that event. You guys should definitely come out. I know the team's gonna be out there. I'm gonna be speaking on like a hotel panel with Mike, but should be a good time. Damon John's gonna be out there. Pace Morby, it's gonna be sick. I think like a couple thousand people this year.
Oh, cool.
But you guys should check it out, man.
Nice.
Yeah. So with your business model, man, I love what you guys are doing. Where do you guys kind of envision this going over the next 24 months?
Yeah, I mean, I envision this time next year to have about 1,000 properties under management. The pace we've been growing, that's kind of what we expect. Especially if we can get a small 100 or so acquisition going again. Those are hard. Did our first one, and it was definitely eye-opening and challenging. So yeah, we want to be in that 1,000 property over 12 months, over 24, I would call it, 1,500 to 2,000 mark. We're starting a fund as well. It'll be launching, I don't know when this episode will launch, but a week or 2 from today. So maybe by the time it releases, we'll be live.
Nice. Tell me about the fund.
Yeah, so we're gonna raise $40 million, and as of now, probably focus on going in unlevered in single family homes for now.
Just all cash.
Yeah, all cash for now, and hopefully in a 2 or 3 years, who knows, right? Maybe put a little bit of debt on it, but really focused on low risk and kind of investor friendly focused. Where first dollars out, kind of go to the investor, and their principal goes to the investor before we even make our money. We want to focus on kind of Fund 30 and Fund 40 before we focus on just, getting rich quick with Fund 1 or anything. So single families in the $1 million to $1.5 million range. The proof of concept is going to be Michael's home in Asheville that you've probably seen. It's absolutely killing it. So we'll, take that model and build it out across the country. In probably about 5 or so markets that we've handpicked. Yeah, we'll launch that in a week or 2. Hopefully we're in the final kind of red line.
506C?
Yep.
Yeah. How much will this first fund be in terms of what are you guys going to raise, you think?
40
million?
Yeah.
Okay. And how many, that's about 40 properties at $1 million?
Yeah.
Okay.
Yeah, I mean, you'd probably, bring it back a little bit because, probably 30 because I have to use furniture, and then remodel and everything. So yeah.
Why not use some debt to juice the returns a little bit?
We've ran, every Monte Carlo model that we, and we probably, in the PPM, we can go up to 50% LTV, but just in the environment, that's the way the debt environment is right now. I mean, and this was also 2 weeks ago. The difference in 2 weeks has been crazy, right?
Yeah,
in the past
absolutely.
2 weeks. And so, we'll see where it, it lands over the next 2 weeks, or even just because it's 40 million doesn't mean we're going to raise 40 million, next month. So, we'll raise, 40 million over the next 12 months. There's going to be different debt environment in December than it is today. So as of now, we're really gonna, and it might not be all cash, but it's going to be very low leverage and really focused on that cash flow versus focusing on, kind of less risk as well. So.
Yeah, I love that. Hey guys, real quick, the only way the show grows, the only way we continue to bring on bigger and better guests is if you guys rate, review, and share the show. So if you could take 2 seconds or the click of the thumb to review on Apple or Spotify, it will mean the world to me. But more importantly, we'll be able to reach more entrepreneurs and more real estate investors and help them build wealth through this podcast. Now back to the show. Tell me about Michael's deal up in Asheville. I don't know too much about it.
Yeah. So it was, let's see, I think it's 6 bedrooms. He wouldn't mind me saying the details. $980,000 property, 6,000-ish square feet, big house, maybe even close to 7,000. I can't remember. Completely remodeled it. Put about 25% down. So call it 250. Then 200K in the remodel and 200K in the furniture. And so probably 650 all in. In July was funny. We had a little joke. The over under, a little bet what we have going on for this July is $68,000 in bookings.
Wow.
Because as of today, January 10th, I think it is, there's 12 nights booked for like $2,300 a night. So that adds up to like $70,000. And so we put the over under at 68, probably about 10K in, debt and expenses and utilities. So, say it does 60, right?
Yeah.
I mean, it's like cash flow, $50,000 off
What will that thing do annually?
Closer to 400. Yeah, close to 400.
Sick, dude. That's great.
It'll be good. To get something that'll do, closer to 400 for under $1 million.
I would say, what was it, the 20% rule. So you're buying
to purchase price to
let's
revenue.
just say you're buying a $900,000 property. You're going to put $100,000 into everything. You're all in. Cost base is $1 million.
Yeah.
If it's just simple, quick back of the napkin math, if it's going to expect to bring in 20% or more than the $1 million, that'd be $200,000 or more. Then it would be a deal that's worth underwriting. But in this example, you're saying 400 grand off of the $1 million,
$2 million.
So you're looking at it's 40% rule.
Yeah.
That's pretty good.
Yeah.
That's really good.
It'd be a little more than, this will be a little less than 40% because
he's put in a lot of money for the renovation.
Yeah.
Okay.
But
it's still crushing, dude.
Oh yeah, still killing it.
So you guys are going to target more of those types of properties in similar markets.
Yeah. So it's going to be, kind of in between that, retail investors that, that I'm used to buying, that everybody's used to buying, the $500,000 to $800,000 home and the Lux home, kind of in that happy medium, finding a, value added property, because it's going to be interesting too when that property's going to appraise. He bought it for $980 a year ago. I bet it appraises now for at least 1.5. Just looking at comps and looking at price per square foot, in the neighborhood. So he'll eventually obviously refinance out of that. It'll be interesting to see, because over a year, even at 1.5, whatever that math is, 33%, 33% appreciation. I mean, that's crazy. Sorry, no.
So you guys bought a property management company. How many properties were in that portfolio?
120.
Yeah.
Yeah.
What's that process like? Did you guys go through a broker?
Yeah. So actually, he's on our advisory board, Jacoby Olin. C2G Advisors out of Nashville. If they're not the top broker in our space, they're definitely top 3. I mean, they've done hundreds of $1 million of transactions over. I believe his dad founded the company a while back. But anyways, yeah. So he represented the seller. He sent us the deal. We bought it. The asset at that point are the contracts. So you kind of go through the contracts, make sure they're all signed, look at them, and go through that. And great market, Port Aransas. You ever been down there? Heard of it?
No.
Near Corpus Christi.
Okay. In Texas, southern Texas, right?
Yeah, so it's like the big cities on the coast. You got Galveston, then you go south. You got like Port Aransas, Corpus Christi. Then you keep going south. You got South Padre Island, kind of down the Mexican border. And then, so we're in Port Aransas. It's an island on the Gulf of Mexico. Very vacation, based town and society, which we like from an acquisition standpoint. There's never, if they ever regulate short-term rentals, it's going to be detrimental to the economy, because I bet 95% of the properties there, I bet are, only 5% of primary residences, I would bet. Been challenging, because, I think you had these legacy kind of mom and pop property management companies, like we kind of talked about earlier, and the same thing for us on the property management side. There's a lot of companies coming for sale. And their owners, most of the time, are, the older generation who might not understand technology as much. So we try, when we came in, we didn't make any changes, because we bought it in June 1st, and then basically June, July are like the top months. And so we didn't want to, change anything there. September comes, start making some small technology changes, bits and pieces. And then, you kind of hope the owners can be patient, because they're going to see results. But you're doing these changes in the slow season. they'll see them next summer. You know, think about, you know, the company didn't use any dynamic pricing. So adding in dynamic pricing, but at the same time, you have to teach, you know, the owners what dynamic pricing is. Yeah, you might be priced lower some nights than you were, but you're also on July 4th week going to be priced way higher. So it's been challenged from an education standpoint. Also, you know, you're blending two families together. You know, you're blending the home team family with the turnkey family. That's gone great. You know, shout out to, you know, Kevin and Audrey, who, you know, I think I knew going in, they're the sellers of turnkey. I knew going in how important the relationship was between buyer and seller. I think I underestimated it by about, you know, shout out to, you know, Grant Cardone, by 10x, you know, and luckily they're amazing people and have really helped us. And now and then we structured the deal too, that they're incentivized to, you know, help owners stay on for many changes and even grow too.
Oh, that's kind of cool.
Yeah.
Yeah. Did you guys lose a lot of clients? Like, what was the retention rate when you guys closed?
We bought 120 contracts, and I bet we're like 145 contracts now.
Wow.
So which is abnormal. Usually you lose a lot more than you gain in the space, and that's why it's important. Because me and Kevin, hey, this owner called, there's this issue, so then like one of us can go fix that issue. And then he can remedy it, you know, and then he can call the owner, hey, it's fixed, sorry about that, you're good. You know, versus like if they weren't to help at all and they called him and he didn't answer and they get mad and then they leave. I bet we've lost, we've added a lot of, you know, people. I bet we've lost, you know, less than 10 out of those 120 contracts. So, but we've gained a lot more too. So
what does it look like for the revenue management? Revenue management's huge, as you know, but you know, you got to be hands-on with these calendars and the pricing strategies. And it's, you know, it's one thing to do it for a hotel, but like to do, I mean, at scale, single family, that's a lot of moving parts there. So how do you guys approach that? What does the team look like in terms of revenue management?
Yeah. So, you know, there's kind of a two-part. One, like I think important to talk about is our general thought and process in revenue management in general, which is, you know, if you go look at 99% of the markets on AirDNA, and you go look at when they're being booked, while they're being booked at their future, you know, booking pace, 60 days out, 33% are going to be booked. Well, that's your nights. I mean, that's your weekends, you know, that's your holidays that are getting booked 60 days out. So in our Price Labs account, we're marking up, you know, weekends and holidays by, you know, you can mark by weekday, you know, 20, 25% than what's even recommended. But then, you know, 14 days out, the other, you know, about 40 more % is being booked. Well, that's your, you know, your last minute weeknights that are going to get booked. So therefore, even, you know, 60 days out, we're discounting those weeknights because we don't want to be a race to the bottom. You know, we want to get the first weeknight booked, you know, 60 days out at a normal rate versus being, you know, a race to the bottom for that weeknight. Then what we do, we have a, you know, a director of revenue management and a team there internally, onshore and offshore, about 3 onshore, about 4 offshore in Venezuela and the Philippines.
Wow. So you have a director of revenue management where that's just their sole role.
That's all they do.
And then a team of 7.
No, so 2 under him onshore, and then 4 more offshore. Wow. So a total team of 7.
Just to do strictly revenue management. And how many properties is that total? Ballpark?
So right now live we have 323 live.
Got it. Yeah. So it's a team of 7, revenue management for 320.
Yeah.
Dude, that's it's good to know.
Yeah.
It's good to know that you have that many people just focus on that one. And it's important too.
Yeah. I mean, a lot of people think this, you know, dynamic pricing, whether you use Price Labs, whether you use Wheelhouse, is a set it and forget it tool. And that's not the case. You know, just because they have the data that thinks the pricing should be this doesn't mean the pricing should be that. And then, you know, the one thing they're doing, the first thing they do when they get in during the day is they're filtering. They're going to every property and filtering 30 days out, you know, who's in the red. Do you use Price Labs?
We do. Yeah, we do use Price Labs.
So, you know, in the red, you have the red, yellow, and green, I guess it is, where red's like below market rate, you know. All right, why are they below market rate? Is it pricing? Is it optimization? Is it pictures? Is it amenities? Whatever it is, we need to figure it out. You know, if it's amenities, if it's design, we need to have a conversation with the owners. Hey, here's the market. You're at the below the market. This is why you're below the market. Either you can, if you're okay with it, fine. You know, we're not okay with it, but if you are, that's you know, that's your issue. But if you're not okay with it, we can help you for free. Like all our interior design services, we offer for free for our internal clients because we're gonna get the money on the back end. So
yeah, dude, I love that. Yeah, it's good to know. I mean, because I know for us, the revenue management, it's you know, the biggest component of like bringing in the revenue for these properties, and it's something that as you scale, it becomes more and more workload intensive. And so we're hiring right now for a director of hospitality, but I think at some point this year we're going to have to hire someone to just do revenue management full time.
Yeah, it's definitely a pain point, and it's we win a lot of business because a lot of companies don't know what they're doing for revenue management. We stole an investor had 3 beautiful homes in 30A. This was this week. What's today? Wednesday. I think it was Monday conversation, and he was fully booked for this summer, like fully booked from like Memorial Day, Labor Day. I'm like, dude, your price if you're fully booked, in January, should you be 40%, 50% booked maybe? But if you're 100% booked, you're priced way too low to be booked out 9 months at a time. So would you agree with that?
Yeah, no, I agree.
Yeah,
I agree.
And so that was the easy switch to then show him a comparable property. Hey, these guys, we're booked with these guys just the same amount total revenue as you are, but now we have 50% of the calendar left to play with to increase that number. So
yeah, that's interesting, man. What does the rest of your team look like? I'm curious.
Yeah, I mean, we probably we're staffed more than we probably should be just to handle the growth that we've had. So that was nice. Kind of the exit of my last company was kind of the seed for this company. So it's been nice and not necessarily like we have to make money, so we have to stay lean. We're pretty lean, I would say. Like we're profitable, highly profitable. But we have room to grow with our team. So we have I would say 3 or 4 main leadership level players, a director of operations, vice president, and then Michael's obviously heavily involved, marketing vice president, and a design vice president as well. And then they have kind of people under them. A large offshore team. That's one of the reasons that we're probably more profitable than another management company would be. And they work for us. They don't work for a third party recruiting firm or anything out there. They are strictly we found them. And we hired them, and they strictly work for us. So that's been nice. Probably have 20 offshore teams, 3 in marketing. We mentioned the price revenue management, guest communication, for that 24/7, communication. So, there's like 43 employees now. So.
That's cool. So I've had Michael on the pod. I've had the Summer-Led girls on the pod. One of the members in our hotel mastermind actually is using them for one of his projects, a hotel project.
Is that the big one in Gatlinburg?
No. This one is a deal out in Arizona.
Okay.
And then the one that we're buying, closing February 2nd, Summer-Led, they've been on it. So if we move forward with them, is that through your company? Or is that
no, that's strictly them.
Okay, got it. Got it.
The only time that we would ever be involved is if you're a turnkey client and we found that property for you and did all that. And then they would do the design. We'd do the project management of installing the furniture, installing the wallpaper, all that. So
okay. Yeah. I love that, dude. So moving forward, I mean, obviously we're in a high interest rate environment. I think we're going to see some rate cuts this year. We'll see more rate cuts in 2025.
Yeah.
But moving forward, I mean, it sounds like it's probably going to be easier for you guys to find deals to pencil as the rate environment kind of comes down. Are you guys looking to really scale this thing up into 1,000+ properties?
The B&B turnkey service?
Yeah.
Oh yeah, for sure. We see our kind of the propco opco structure in our operating company. We see 3 main ways to grow it: organically or through acquisition, right? But just normal property management style growth. Then the B&B turnkey, and then the fund. It's going to be hard to separate B&B turnkey from the fund because it's similar. The fund's way more passive. That is just, hey, you're an LP, you invest, and then you get a check every quarter, and you get your tax, your reporting and everything. And I would say on the turnkey, you're more involved. Turnkey, you own the whole entire property. You get all the tax benefits. You get everything that, as if you would normally. So yeah, we could easily turn turnkey to 1,000+ properties. I mean, it's been 4 or 5 months. We're at 78. So first year, and it's really picked up over someone just bought 5 properties from us because they can buy more than one at a time. We get a discount on the back end. Someone just bought 5, so it was like $80K up front. And so we definitely can grow it to over 1,000.
Yeah, so. I love that. I feel like with the clients, because we do manage for some third party clients. Mm-hmm. And some of our investors in our fund and have invested with me in syndications over the years have bought some of these properties, but it's different, right? Because the investor in a fund or as a limited partner, they're completely hands off, passive. Yeah. But then once you buy property and it's like, oh, their name's on title or their entity's on title, this is like their property. Mm-hmm. it's definitely a little bit more hands-on for that investor.
Yeah.
Or for whatever reason, I feel like they feel like they should be a little bit more hands-on versus a limited partner where they just wire the funds in and collect a distribution.
Yeah.
You notice that too?
Yeah, for sure. You know, and most important, they have an opinion.
Yes.
Where I think that's
even an opinion on the design.
Yeah, an opinion on everything. So there's pros and cons to that for us, right? The pro is, you know, it's a great business model.
Mm-hmm.
The con is, you know, obviously I'm biased, but we're really good at what we do. We're the expert, and then the investor might not be. You know, I say that lightly. Is they give an opinion on something. It's like, you know, we have to go, hey, no, just, and it's like you have to prove it to them. You can't just say just trust us. We're in the fund. They wouldn't really have much. They would have a say. You have your investor relations team or whatever, you know, but like they would have less say.
Mm-hmm.
So there's pros and cons to that for both sides. If you want to be completely passive but still be, you know, have some, you know, some of your money into the Airbnb world, that'd be the way to do it. You know, the B&B turnkey model. There are companies out there that do that model. I mean, I've seen it on their website. But there is no one in the country doing it at the scale we're doing it. We'll have 50 clients at one time, either you know, under contract or in the remodel phase or like about to go live, or looking for a property. And so the scale.
And you guys will manage the renovation for these clients?
Yeah, wow. Manage everything.
Yeah. That's a lot.
Oh,
that's a lot to take on, and you guys are in all these markets.
Yeah.
I know managing contractors, that's no easy thing, but you know, it's also a liability. I mean, the biggest risk is you find a bad contractor, they can run off and really delay the project, and you lose a lot of money. So that's pretty impressive that you guys take that on as well.
Yeah, it's just, you know, I tell people all the time, I do two things in my life. I work and I play with my kids, and that's about it. And so it's a lot for sure.
Yeah, I love that. Well, Elliott, I appreciate you coming on the show, man. Where can listeners get in touch with you if they want to learn more?
Yeah, Instagram. We do a lot on Instagram. Obviously our website, hometeamvr.com, but mainly Instagram for sure.
Cool, man. Well, I appreciate you coming on. Excited to hit that meetup with you and talk shop a little bit more. He's Elliott Caldwell. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you in the next one. Peace.